Welcome back. Well, we are on countdown mode. The jobs report for the month of May out in about 2 minutes' time. The expectations call for 85,000 new jobs created in the month of May, with the unemployment rate holding steady at 4.3%. Let's see if the numbers hit as expected. Joining me now is Unleash Prosperity co-founder and former Trump economic advisor Steve Moore, Job Creators Network vice chairman Alfredo Ortiz, Navalier and Associates founder and chief investment officer Louis Navalier, and American Staffing Association board member and Dress for Success worldwide CEO Joni Biley, and of course Charles Payne and Cheryl Casoni. Thanks everybody for joining us on the panel here as we await these numbers. Steve Moore, do you believe the jobs picture has improved in the last couple of weeks?
No question. And by the way, 4.3% unemployment, that's an amazing number. I mean, if we're anywhere near that, people should really appreciate, we do have jobs in this country. People who want jobs can almost always find them. And you've used the word resilient for the economy, Maria. I like that word. I'm going to add durable. And this is an economy that looks like it's about to just take off. We'll see. Ask me in 5 minutes about that. But I'm predicting a pretty good number.
Yeah, Louis Navalier, what do you think about expectations and where we are in terms of the macro story here? You got to believe things are resilient and durable based on market performance since the end of March.
We're tracking for my 5 to 6% GDP growth prediction. I mean,
wow.
May not get it this quarter, but we'll get it by the third quarter. Obviously, we have all the onshoring, ISM super strong on manufacturing services. Consumers are in a good mood. We have record earnings. I mean, last I looked, it was up 29.3 this quarter for the S&P. Earnings supposed to be up 21.5. That's going to filter down, and it's very bullish. And guess what? President Trump owns a lot of our stocks, so I'm excited.
Yeah, and we also have like $7 trillion on the sidelines looking for a home. So there's that. Now, look, there's a lot of capital raises going on, right? From SpaceX to Google to Anthropic to OpenAI. So we'll see. But the numbers are out. Let's get right to Cheryl with the jobs numbers right now.
Wow. 172,000 non-farm payrolls were added to the economy in May. The estimate was 85,000, guys. There you go. 4.3% is the unemployment rate. Private sector jobs coming in better than expected, 120,000. We were looking for 85,000. Labor force participation rate, 61.8%. And you're seeing May average work week unchanged, 34.3 hours, and that is on track. Now, April has been revised to 179,000. The original April read, Maria, was 115. They just revised April to 179K, and they're also revising March to 214,000 jobs. The underemployment, that U6 number, that's 8.1%. But again, it is all about these big numbers that we're seeing. Factory jobs, 7,000. That's actually also better than expected, 7,000. Let me give you a real quick read of what the government is saying about where the jobs are. I have a feeling healthcare is going to be at the top of the list. We shall see. But they're saying basically that big jump in leisure and hospitality, local government, and health care. They also said that employment ticked up in employment and financial activities actually declined. But quite a number there, Maria. I'm digging into the numbers. But, and the market has reacted. Charles, I mean, it moved a little bit. I don't know. I'm just saying. Back to you.
No, it reversed course. You're right, Cheryl. It reversed course. The market was up, and now the Dow was up anyway. And now we just saw it go into negative territory. But the bigger move, of course, is the NASDAQ. But why the negative reaction here? Charles, do you think? I mean, is this about Warsh's next move?
Yeah, this hamstrings Warsh, and this is what I was kind of alluding to when we went to break. Listen, it's the narrow range. We were up 4. That was up 43. Now we're up 4. The market's going to have to digest this, but I think Louis hit on the bigger points here. And Steve, the momentum in this economy, and now we see it on the job side. We see it on manufacturing, the renaissance, cannot be denied. And, I think Warsh is going to be able to find a way to convince his fellow Fed members at some point we shouldn't punish Americans for success. And so, yeah, we'll have this initial reaction. But overall, investors shouldn't really be too focused on this and be more focused on the fundamentals of 214,000 jobs in March, 179,000 jobs in April, and today's jobs report. That's what you should focus on.
Yep. And I want to find out where the jobs are right now. Alfredo Ortiz, what are you seeing in terms of where the jobs are?
Yeah, a lot of the jobs are, again, in small business. I mean, small business continues to power the economy. If you look at the combination, the ADP report, the JOLTS report, and probably this report as well, it'll confirm that small business has really been the hero of the economy for this entire year. And it's no surprise, right? Because look at just the working families and tax cuts added $85 billion in savings to our small business owners. And remember, Maria, they put all that to use. So that means more investment in technology and infrastructure and jobs. And so small business continues to be the power. Like, I almost feel like wearing a red cape with an SB on me, because that has truly been the hero of the economy. And we just love our small businesses this year for sure.
Absolutely. And they've benefited from the big, beautiful bill. That's for sure. They've been expensing things and growing and hiring.
That's
Cheryl,
right.
what else can you tell us?
Well, when I was looking through the numbers in particular, I think it's the revisions that really are the market is also focusing on. And again, what this does as far as the Fed and Kevin Warsh. But the other thing I was looking at is that we're still seeing wages that are still tracking and still strong. That came out in the report as well. And I think that kind of shows you the resilience of the economy when you see wages the way that they are. And average earnings coming in line 0.3%, earnings year over year 3.4%. That met expectations, but those are still strong numbers. The other thing I want to point out, Maria, though, is we're going to get CPI next Wednesday, and that's another bone of contention that that Kevin Warsh and the Federal Reserve is going to have to deal with, and that it's becoming the inflation story less so than the job story. But again, it's really remarkable. There were so many hawks out there saying that AI was going to be this massive job killer. That is not happening. We are not seeing that, Maria.
No, we're not seeing that now, although we have seen a number of companies cut jobs because of AI. But they're not talking about what jobs will be created because of AI as well. Joni, are you seeing a lot of AI conversations underway right now with regard to those people looking for jobs?
Yeah, it's probably the #1 conversation, Maria. This is really a very interesting job report. And when we take a look at the overall job creation, I'm actually surprised we didn't see a bit more in the professional and business service sector. It looks like most of these jobs are created in healthcare and leisure and hospitality. Great sign to see 17,000 jobs created in construction, but over 50,000, right, in the government sector. So we have a very stable job market. And even in that layoff story, especially what Charles was saying before, yes, jobs are being eliminated, but those companies are also still hiring. They're hiring for different types of roles. So that's what's so different. Like, we've never seen a time where, yes, companies are laying off, but it's not financial distress. Their earnings are strong, right? They're stronger than ever. The jobs that they're hiring for are really just different. And so the story here really isn't about job creation. To me, it's about workforce readiness. Do we have the talent to meet the demand of the jobs? Because it's all about AI literacy, project management, cybersecurity, data analysis. Those are the types of positions that companies are hiring for, and AI is top on the list, and people really need to get ready and have those skills.
Well, look, we've been seeing an improvement in the jobs picture now for 3 months. Charlie Brady here at Fox reports that jobs have improved 150,000 plus for 3 months straight at this point, Steve. So no wonder we've got this resilient stock market and an investor community that's looking past this spike in oil and gas, Steve.
Well, this is just a beautiful picture. Let's not bury the lead here. This is a blowout number. It is a great tribute to Trumponomics. Art Laffer and I wrote the book, The Trump Economic Miracle, last year, and what we're seeing right now is nothing short of a miracle. We've got $90 a barrel oil. I mean, imagine how good these numbers would be if we could get the, gas price back down to below $3 a gallon. But just look at the overall economy. So we've got rising wages in this country today. We have a construction and manufacturing manufacturing, those numbers on construction and manufacturing in terms of productivity are incredible. You've got blowout numbers on the stock market you report every day. We are blowing away the rest of the world. These programs are working. It didn't happen by accident. And by the way, Paul Krugman, who won a Nobel Prize in economics the other day, said we have to did you hear about this? He said we have to have demagnification in the economy. I'm like, what the hell is this idiot talking about? We got the best economy ever, and he said it's not working. So I love this. And if anything, by the way, one last point. We have a shortage of workers in America today. Just ask employers. They're still having a hard time finding the skilled workers they need to fill all the jobs.
By the way, that guy has been getting it wrong for 10 years plus.
20.
I don't know, 20, but certainly for the last 10 years when I've actually been paying attention to what he has to say, he's been so wrong on economic issues. I have no idea why he's listened to anymore. But Louis Navellier, let's talk about allocating capital here. Where do you want to buy in an environment where you do see all of these positives? I personally feel like a sell-off is coming. It's coming soon, only because I see all this stock that's coming to market with the SpaceX IPO and the Anthropic IPO and the Google raise of $85 billion there and OpenAI. Now, I know we've got $7 trillion on the sidelines, but it feels to me like maybe this rally is getting tired. Just an observation. Your thoughts, Louis?
Well, June is the annual Russell realignment. All they're going to do a realignment in November. So we've noticed a lot of small caps are acting very well with the rotation that Charles pointed out. Also, I would add that we'll have another round of record earnings in July. So the real period that I dread is August and the first half of September. There's 6 weeks there that are very seasonally weak. So Paul Hickey at Bespoke does these great charts of the internet boom versus the AI boom. And we're pretty much moving in lockstep, but he did highlight that when we hit those bumpy summer months, that there can be pullbacks. So the pullbacks we're having now are healthy. Obviously, all those AI stocks with great earnings and they raise their guidance are good buys on dips. But the small caps will be the best this month, in my opinion.
Small caps. You want to own small caps here, and of course, small caps have been broadening out. We're seeing a pretty good broadening out of this market, Charles, and that's certainly been evident in some of the moves, like even yesterday when banks and retail took over from tech leadership.
Yeah, financials, banks, the industrials have done. There's so many groups. I mean, this has been a narrow rally, but it is going to broaden out. Yesterday was a prime example of that. I do want to just pick a couple of things, too, with this jobs report that I think are phenomenal. So unemployed less than 5 weeks, down 286,000. One of the big issues have been people losing their jobs and not being able to get one. That's phenomenal. People unemployed because of economic reasons, working part-time, that's down to 137,000. Those are the little nuances that tell you, to Steve Moore's point, how great this economy is working, how great these policies are working. As far as the market is concerned, I think investors who have made a ton of money are going to be loath to just move to the sidelines. In addition to all that money and money markets and other things, you're going to see rotation. Small caps have looked great. They came out the gate strong. Equal weight stocks came out the gate strong. I think they can pick up where they sort of left off when the Iran conflict began. So I'm extremely bullish on all of this.
Mm-hmm. Well, look, you've got a macro story that is supporting job creation, Joni, and you just went through what changes you're seeing there in terms of jobs. Is healthcare still the highest paying industry out there in terms of job creation?
Well, healthcare actually has the most amount of jobs open. What's been really great is looking at the JOLTS number, and hopefully a lot of those job openings are going to come to fruition, and we'll see even more numbers in the upcoming months. We did see the JOLTS report, spiked up to 7.6 million open jobs. Most of the increase was in professional and business service sector. But Maria, and I've been on your program for so many years. I've been in the workforce industry for over 30 years. I've never seen a job market like this, in the sense that we don't have enough people. If you look at unemployment, for a bachelor's degree or higher, unemployment is at 2.7%. So skills, experience are so important. And I think we really need to think differently about how we get, the workforce ready. As you know, I've pivoted and leading, a worldwide global nonprofit right now that's focused on helping women. Women are really being impacted by AI. They're in administrative roles, customer service roles. We need to get them ready for the workforce and the skills. And that's what we're actually doing at Dress for Success, really focus on development opportunities, AI training, financial education training.
Yep.
Like, how do we get our workforce ready for the jobs of today, but certainly of the future? So healthcare is going to be hot. Business operations certainly will be strong. There's going to be a lot of opportunities too in engineering, in certainly the trades. The trades is a great opportunity. Women obviously underrepresented, huge opportunities to get people into the trades. So it's all about skills and workforce readiness right now.
Yeah, and when we spoke with Dina Powell McCormick recently, president of Meta, she reiterated that women are not using AI as much as men when you just look at the relative comparison. So she mentioned that, which I thought was interesting. She also said, Cheryl, that we're going to need 500,000 new electricians.
Yes, and I would make a terrible electrician. But I was looking through the ADP, because you were asking about kind of where the money is being made, right? Is it still in healthcare? If you go back and look at ADP in the private sector, which again has been, actually ADP was in line with this report, so we're kind of back on track there with that correlation. Basically, net hiring was widespread. It's across many, many sectors. And whether it's trade, transportation, utilities, that's 36,000 jobs. But also, we're seeing it in 80,000 positions that were added, in particular with regards to not just healthcare, but we're starting government jobs are building up, and then education as well. Education, that could be a good story for the female component out there and those workers. But overall, I think that all the boats are being lifted here by this economy, and that is what we are seeing. By the way, I'm curious to see what's going to happen with the inflation forecasting, because I was looking at a report from IMF. They're still saying that we're not going to get to 2% inflation until the end of 2027. I think the Fed's credibility is kind of an interesting topic right now, because they're going to have Kevin Warsh is going to have to kind of wrangle in the board, and they're going to have this discussion about that 2% target.
Yeah, for sure. And I'm looking at a Fundstrat note right now. Thomas Lee writes, history shows the markets will test the Fed. And we also expect markets to challenge Kevin Warsh in his first few months as new chair. As we've highlighted in the past, here are his issues. Number one, oil versus AI. Which matters more to structural inflation? Number two, future Fed guidance. Warsh prefers to eliminate guidance altogether. Number three, Fed versus hawkish markets. Warsh sees less structural inflation versus markets. Five, stock market is the economy, wealth effect, and Fed will increasingly have to focus on equities. Isn't that interesting, Louis, that Tom Lee thinks that the Fed is going to have to focus on equities given the increase in wealth that we've seen over the last year?
Well,
plus,
let's be frank. The Fed can't fix food or energy inflation, so the core rate's more important. Scott Bessent says the inflation's transitory. It should be cooling off by the fall. And obviously, Kevin Warsh may change the Fed's guidelines and the material that they look at to make their decisions. But the biggest thing, by far, okay, is that AI productivity gains are not inflationary. And that's his main argument to cut rates. So I'm not too worried about it. I still expect a rate cut later this year, but I'm listening to Scott Bessent, and I do expect inflation to cool off later in the year. Oil goes down in the fall anyway because worldwide demand drops.
Yeah,
so,
great point.
Also, the rest of the world's not doing well economically, and so that's deflationary. Also, the dollar's strong. That's deflationary. So there's a lot of forces forming up that will allow one rate cut at the end of the year. And Kevin Warsh just has to convince the FOMC members to go his way.
Louis, look at this yield on the 10-year right now. It's up almost 6 basis points. 6 basis points, sitting at a level of 4.53%. What is going on with rates, Louis?
Well, that's Scott Bessett's problem. It's his job to control this, but obviously that's the demand push inflation from a strong economy. And so if we had a poor payroll report, we'd have falling rates. But Scott Bassett is so much better than Janet Yellen. I mean, under Yellen, she lost control of the long-term Treasury auctions. We had an inverted yield curve. Under Scott Bassett, we have a normal yield curve with a positive, with a normal slope. So in Scott Bassett, we trust. We're very fortunate to have this Treasury Secretary.
He's excellent, and he talked to me last week about his expectation for oil and gas second half of the year. Watch this.
Crude, West Texas, is down about 25% from the closing peak. A couple of weeks ago, it's down about 12% this month. Gasoline prices are down, I think, about 5% now, and they will go back down. And I think on the other side, the oil market is going to be very well supplied. The UAE has come out of OPEC. I think we maybe got some permanent demand destruction out in Asia. Had record tax refunds I've told you before, 44% of filers, 62 million forms we had filed, they applied for one of the president's 4 signature tax policies. No tax on tips, no tax on overtime. 85% of our seniors didn't pay tax on their Social Security, and deductibility of auto loans for American-made cars. Factory construction and manufacturing construction, up 17, 19%. Maria, construction jobs of facilities turn into manufacturing jobs. We've seen an uptick in manufacturing.
And I think that's the key here, an uptick in manufacturing. You could say that again, Steve Moore. We're looking at a productivity boom right now, thanks to President Trump's policy to bring the supply chains back to America.
You just took the words right out of my mouth. That's exactly what I was going to say. We are at the very beginning stages of the greatest productivity boom in the history of the world with respect to what's going on in technology. The most important issue for Donald Trump and our government right now is to ensure that we lead the way in this AI revolution. It is coming, and I know people are nervous about it. They don't want data centers. They don't want AI. The polls show that. But it is coming. Robotics is coming, and we need to make sure that it's the United States, not China, that is leading the way. By the way, China is the country that's pumping in all this anti-AI propaganda in the United States. They're funding these campaigns against it to slow us down. One quick point, if I may, about listening to Joni talk about where the jobs are and who's working. You know what? One area we really need to improve on, and I just wrote a column on this for Fox News, is young people. Maria, it used to be about half of teenagers were in the job market. Today, it's only 1 out of 3, about 35%. We need young people to start working. The younger parents out there, the younger your kids start working, the more successful they will be in their life.
Great point. And it's true. You want to get a job early on. But, we just had a segment on Alfredo about the young people who want to get a summer gig. It's getting harder and harder. What's your take in terms of all of these worries about AI and job cuts in terms of the prospects for the 2026 graduates?
Yeah, it's really interesting. I mean, a few comments on the AI portion. First of all, for our small businesses, I think AI is really becoming kind of the great equalizer, and it's allowing them to do so much more with the current resources that they have. It's amazing. I'm seeing it firsthand. And I think in terms of the overall impact that's also happening, if you look at those construction jobs, the 17,000, if you peel that back, a lot of that is actually related to AI data centers. So that is also growing in terms of a trade there. And so in terms of these overall skills that kids are going to need that are graduates, obviously being able to be working with AI and even our current employees, and you guys have all been talking a lot about kind of workforce preparedness or readiness. There is kind of, I think, in our small business community, this feeling that, look, AI is actually allowing us to do so much more with what we've got, and they are going in and retraining their current employee and current staff. And so I think we're seeing opportunities amongst small business owners for actually taking on this task of retraining the workforce that they currently have, because again, it's the great equalizer, and that's why the productivity that you're seeing is just so amazing, because they are truly able to do things that might have taken them 3-4 weeks tasks to do, are taking them literally days, if not hours, to do. And so it's really great for our small businesses to be able to compete with their larger counterparts.
Yeah, well, AI is one of those equalizers. I agree with that. Hey, Charles, I want to get your take on this SpaceX story. Underwriters on SpaceX's IPO have been told not to accept orders from investors in Hong Kong and China, citing U.S. restrictions around the export of critical technology. This is a Bloomberg story. And Bloomberg says the decision was driven by internal guidance related to U.S. international traffic in arms regulations, which governs exports of defense-related technologies and technical data. That attracted me. You know, the fact that the underwriters are saying don't sell any SpaceX to investors in Hong Kong and China.
Yeah, there's another great story this morning about the administration going after loopholes where China is still getting those Blackwell chips, NVIDIA chips. You know, this is a huge battle. And everything that we're succeeding on, they want desperately because, you know, someone mentioned deflation in China's economy earlier. They're in so much trouble right now. It's really amazing and underreported. So I love that idea, if we can, because Steve Moore is right, and I've been saying this for a long time. I did a special town hall on robotics. I did a special town hall on space. We must win this, period. And we've got to, listen, articulate the jobs to people who are afraid of data centers. According to Goldman, it's been over about 250,000 of them since ChatGPT came out, and that number's picking up. Articulate the future. Articulate what it means for local communities, because ultimately energy prices will go down. These companies have to get their own generators. Yes. So it's a wonderful local story, and it breaks my heart to see municipalities and cities that are pushing back on this. You're talking about your economic future. It's going to happen with or without you, and America must lead the way.
And that's why we are seeing the president take policy changes and make policy changes to enforce and encourage investment by companies, right? I mean, that's why he's doing deregulatory measures. We're also seeing deregulation at the Federal Reserve as well, Steve.
Look, this economy, when you look at how policy has affected the economy, as you know, Maria, there's three major areas where Trump has made an enormous difference. One is, of course, the tax cut. And one of the things we did in that tax cut is we reduced the cost of investing. And so no surprise, if you tax something less, you get more of it. We're seeing an investment boom in this country. The second thing that Trump did right out of the gate was drill, baby, drill, and make America the #1 producer of energy in the world, which is huge, especially given what's going on internationally. And of course, the third thing is the deregulation. We estimate, Maria, that the U.S. businesses have saved $1 trillion from Trump's deregulation. No wonder we're seeing a profitable stock market. That reduces costs and makes companies more valuable.
All right, let's go through these jobs numbers once more, because we got a market that is mixed. And you know what? When all was said and done, Charles was right. This market did not move very much, but these numbers are much better than expected, Cheryl.
Well, look at the averages for the last 3 months. For the last 3 months, we've averaged 150,000 jobs. But again, today the expectation was 85,000, and we came in at 172,000. The unemployment rate, 4.3%. More people are entering the workforce. That is why that rate is remaining steady. Manufacturing better than expected at 7,000. The private sector, 120,000. That was education. That was healthcare. And then again, earnings growing year over year, 3.4%. So, you know, look, you're seeing strong numbers here again with those jaw-dropping revisions that we got for the month of March and that we got for the month of April. All of that shows you that this job market isn't just resilient. That's the word I used yesterday. Maria, I'll tell you, this job market is on fire. And last year, I'll make one final point. Last year, for all of 2025, we had on average about 10,000 jobs created. It was a very low number. Now we're looking at 150 in just 3 months. That is policy. That is tax breaks. That is deregulation. That is construction. That's all the things that the government is doing to make sure that America is the manufacturing and exporting base of the world.
Absolutely. And Louis Navellier, it all showed up in the earnings. I mean, look, we just capped this first quarter earnings season. It was one of the strongest earnings season we've seen in several years. 80 82% of the companies beat expectations, an overall beat of 16%. First quarter S&P 500 earnings growth, 29%. First quarter S&P 500 revenue growth, 12%. Louis, your thoughts?
Well, for not only we have all that you just mentioned, we had the strongest revisions in 5 years before earnings came out. We're having strong revisions now for the earnings that come out in July. So the analysts are all excited. But to me, the big thing was the order backlogs. We had no idea how big the order backlogs were for all the data center related companies. And it's going to be at least 3 years now. So we have a 3-year economic boom just from that. And I should add that the AI infrastructure stocks, some of which are small cap, a good example would be AGX, that's Argonne, those are doing better than the big AI stocks. So the actual ones building the data centers are booming right now. And in fact, I'll be showing a bespoke chart on that, on something I do. So it's very exciting.
It's exciting to also hear about $7.8 trillion of cash on the sidelines, right? I mean, because typically when you have that kind of cash in deposit accounts or low interest rate accounts, which is what the case is in the banks right now, when you have an opportunity, that money often makes its way to the stock market. Don't you think?
It's the fear of missing out. Fear of missing out. Yeah.
That's right. The fear of missing out. That's right. All right, Joni Biley, give me a final word here on where you think the best opportunities are right now for the 2026 graduates.
Well, I certainly think that they need to lean in on making sure they have the digital skills, the AI skills.
Okay.
Certainly the STEM field's going to continue to be strong, but they need to stay flexible, continuous learning, and take advantage of the growth that is coming in these job openings that we're seeing right now.
All right, we will leave it there. Great conversation, everybody. We so appreciate you. Steve Moore, Alfredo Ortiz, Louis Navalier, Joni Biley, Charles Payne, and Cheryl Casoni. Thanks, everybody. Have a fantastic weekend. 30 minutes before the opening bell sounds, let's check markets here, where the NASDAQ has worsened, but the Dow Industrials have gained. The Dow up about 24 points right here. The NASDAQ down 400 plus right now as we approach the open. And I still think that's because people are selling the tech holdings they have to raise cash for some of these IPOs.